What's up, guys? I'm Mike from StockedUp. In this video, I'm going over some stock and options picks for you guys. Now, before I start the video, I just want to insert a little clip from yesterday's video. I really think we're going to see a red day in the stock market tomorrow. So that was a clip from yesterday's video, and the stock market felt pretty bad today. So the Dow at one point was down 1,100 points. It closed down 973 points. So check my videos. I'm gonna give some plays for the rest of the week. So with the market falling, we do have the jobs report coming out tomorrow. At the record high of the Great Recession in 2009, there were about 700,000 people unemployed. As of last week, there were 3.3 million people unemployed, and the Feds are expecting up to 43 million people to be unemployed. So, if there's a super high unemployment number that comes out tomorrow, expect the market to fall. But either way, there's a lot of downwards momentum in the stock market right now. As I've been saying for the past week, I really think we can really retest these lows right here on the SPY at about 220. For the Dow, that's a little over about 19,000. I think we could really retest those. The market has been a little bit weird with the electronic trading going on. It's been weird, to say the least. It's been a little bit slower than normal, but it's just weird. You know what I mean? But it is nice to see this big 1,000-point down day. Today shows that we do have some volatility in the works. And I know a lot of you guys have been following my VIX play. I'm in it too, and of course I want the VIX to go up. Typically the VIX goes up when the market falls. Now, it's not just as simple as that, because for example, the SPY is literally the market. Now, the SPXL is a leverage ETF, so if the market goes up, this goes up 3 times that amount. But if you want to directly play the market falling, you could just buy the SPXS, because this is a stock that goes up when the market falls. But the VIX is a little different because it's a volatility index. So pretty much when things are crazy or people are scared in the market, this is when the VIX goes up. So really the VIX is just the implied volatility of the S&P 500, or its options, I should say. Now you can see on the S&P 500 we have the implied volatility starting to scoop up kind of. And even if we look at individual stocks like JP Morgan, implied volatility scooping up. Coca-Cola, McDonald's, Home Depot, they're all starting to scoop back up. You know what I mean? So that's a great sign for the VIX play. So I really do like this play still. Give it time. I'm giving it time. What I do like for plays for soon, I like Bank of America puts so I actually called out Bank of America 20 strike puts that expire next week on the 9th. Yesterday, and those plays are up about over 100% today. So that was in the stat modeling group. If you want to learn more about that, I'll put the link in the description down below. But I also like IBM for puts, or you could short this too. But IBM, I feel like you could get a good price on the puts. The IV is mid-range right now. It didn't fall too much already. And I do think when IBM does fall, it does tend to have a fall for a couple days, and the candles are they're pretty big. So I like IBM. The risk reward scenarios there. The options aren't crazy expensive. However, I still would recommend a debit spread, so a put debit spread. So for example, buy the 105 put, sell the 100 put, something like that. I think that would work out best. That is that. And also, I like the VIX. So I do like another VIX play. It's the 68 strike calls that expire next week, so April 9th. And I'm going to be going over, I just feel like the risk-reward scenarios there. And when the VIX moves, it moves big. So, you'll see VIX contracts up 400%, 500%, 1,000% in a day sometimes. And I think this play can potentially be that. And I also like the VIX 68 strike calls that expire on April 9th, because someone put about $1 million into this naked play, just this option today. So, that's always good to see, an institution or a hedge fund or whoever drop $1 million in the same play that you're playing. It's an awesome feeling. they probably know something that we don't. If they're putting $1 million in one play that expires next week, but of course, the market, everything's risky right now. Everything's very volatile. But now is the time where a lot of wealth is transferred. So, like, for example, I know a couple people who had very, very small accounts in February, and they bought a ton of puts on the SPY, and they're doing pretty well right now. And I also know some people who aren't doing too well right now because this whole crash caught them by surprise. Either way, there's a lot of lessons to be learned, whether you're trading, not trading, if you're making money, losing money, whatever. If you guys can survive these times, really, these are the toughest times. Like the market has never been this volatile, even during the Great Recession, even during all major market crashes. Listen to people who've been trading the markets for 70, 80 years. They're saying that this market it's just, we haven't seen anything like this. You know what I mean? So if you guys can survive this, I'm so confident that if you take what you learn from your experiences now and apply that when the market returns to normal, I think you're going to be in a really, really good position. And if you can make money in this market, just not by gambling or anything, I mean, I think there's a lot of great things to learn, and your future will be pretty good. But yeah, anyways, the SPY, VIX is what I like VIX calls. Like I said, they can lose, but to limit your risk, guys, you can always do debit spreads. So, for example, if we go to IBM and you think it's going to fall, right? Remember, options are so expensive on pretty much every stock right now, so you could pick the direction right. So, for example, you could buy an IBM 100 strike put right now for $250. IBM can fall, let's say it's Thursday next week, and IBM falls to $99. You'll still lose money because you paid too much for the option, and just the time premium that's baked in there. So the best thing to do would to do a debit spread, and an example of that would be you buy the 105 put, sell the 100 put, or buy the 103 put, sell the 100 put, or whatever. You know what I mean? Just buy and sell an option. It helps combat time decay. But that's generally it. A couple main things to look out for the market tomorrow. Jobs reports coming out before market open, and that can, it has the potential to cause a lot of damage. Don't hope for it, but I do see the market falling, continuing to fall. And in terms of long-term investments, I don't think now is the right time. Of course, you can pick up some great plays for the long term, and that's fine. But you could always average down. But I do think at the bare minimum, we will retest this low on the SPY, which is about a little under 19,000 on the Dow. I think at bare minimum, we're going to retest that. So I hope you guys gained some value from this video. If you guys have any questions or want to share what you're watching in the market for the next couple days, let me know in the comments down below. But other than that, thanks for watching.